Good morning, everyone. It's Chris here from Serene Education with the 4 majors news update for the 9th of October 2012. Just going to start with the euro against US dollar on our 4 majors this morning. Let's have a look and see what's been happening. So we'll go to the daily chart. Let's have a look. Yesterday, bearish engulfing candle. After that, indecisive spinning top for Friday close, and that spinning top came above the 1300 mark. However, we would like to see obviously a bullish engulfing here, or a nice consolidated candle above 1300 to see price giving us the all clear to go higher. And the only downside at the moment now is we've got a bearish candle. So you can see prices now trading at the underside of 1300, and if that remains the case, then we could potentially see price reversing towards the downside, with the near term target being 12900, which is the 23.6 fib retracement area. If you take the lows here in July to the high currently that we've seen in September, you'll see that 23.6 here just falls short of around the 12900, which in fact brings us back towards this uptrend. You can see the swing highs here, this red trend line. That's where price is likely to go to if price continues to find resistance at the underside of 1300. So intraday traders, guys, if you're looking for any trades, here I go to the 4-hour chart. You can see the 1300. I've got a nice black horizontal line here depicting that. You notice the CTC is still looking positive. We are still trading above the institution moving average, and at the moment now the RSI has started to see a bit of movement to the downside. However, it's still trading above the 50% line. Okay, so intraday, if we see price failing to get above 1300, when you get a bearish engulfing candle at the underside of 1300, then we should be targeting the 12900 mark intraday, and ultimately back down to, if we get below the 12900, then we should be looking at that institution moving average, which happens to be the current support, and that is our daily support as well. So if we go back to the daily, you can quite clearly see here 12800. The institution moving average is trading below prices, other dark line here on the chart. So if we still could see resistance at 1300, then we should be looking at 12900 as our first target intraday for the foreseeable future. Onto sterling, let's have a look at the daily. A lot of negativity yesterday, guys, and this is really showing the momentum now, as we know that the 6300 now is clearly a resistance area. Prior resistance here through the mid part, or the latter part of April through to May, you can quite clearly see near term 16300 now a clear resistance. A lot of indecision candles recently, and now we've seen this bearish intent to the downside. Moving towards 23.6 would have been our first target, because we've taken the low here in June all the way to the high here at 16300. 23.6 was our near-term support. We saw that bounce going into the end of last week. However, yesterday's bearish engulfing candle has taken us below the 23.6 and into the underside. So now, as long as we find resistance on the 23.6, then ultimately we should be seeing price reverting to the downside with our long-term target, or near-term target, back towards the 5900, which brings back us to the 50-period moving average. So as it stands now, we should look at our 4-hour chart to see where price is trading. Yes, it's below the institution moving average now. So as long as price now finds resistance at the underside of the institution, so if we see price bouncing back towards that 1607 and finding resistance, then ultimately we should see price continuing her trade to the downside. If you're looking for an entry setup, daily, you can see just near term price is finding a bit of support and the 50% retracement line here. Just get to see a break below that 1602 mark to see price reverting to the downside. There is a consolidated range near term between 1595 and 1600. There is something to be made there. However, we still want to see that bearish engulfing candle at the underside of the institution to see prices still looking for favorable lows. The RSI is well below the 50% line. However, you can quite clearly see we're heading quite close to the 30, so we can see potentially a change in pullback sentiment as we get to see that pullback after the breakout of yesterday. So be patient. If you want to see that break of this near-term support here, you can quite clearly see on the hourly a lot of support just recently after those breaks to the downside yesterday. A lot of negative sentiment towards this area here. You want to see a nice close below the 1602 mark, bearish engulfing candle, telling us where the sentiment lies. And once we get that, then we can start looking towards our long-term target here at 5900, which will bring us back towards the 50-period moving average. Onto the US dollar Swiss franc. Let's have a look at the daily for this particular pair. Price still heading to the downside. However, you can quite clearly see that 930, between 925 and 930, you can quite clearly see that this price has been consolidating. This consolidation taking place at the underside of the institution moving average. And if I just zoom out, or pan out, you can quite clearly see the last time we were trading above the institution was way back in August, September of last year. And now we've come full circle, because this year, September, October, we actually breached that, and now we're trading at the underside. Okay, so to see price falling any lower, we do need to see a bearish engulfing candle break below 920. We'd like to see it ideally getting away from this consolidator, away from the institution as quickly as possible. The sooner we can do that, the more likely is price is going to continue to fall to the downside. Notice the histogram on the other side is very much negative, and that's coming after we ran into a lot of resistance here at the 1000 mark. But clearly, just near term, you can see that we've had a consolidator bounce before we re-attempted the institution high resistance, and now you can see quite clearly the last 2 days we've had indecision followed by a decision candle yesterday, closing slightly higher on that indecisiveness at 930. If we could see a reattempt of the 940, which happens to be the institution again near term, if this is to be genuine negative, we want to see this support area here at 930 being breached as soon as possible. Fail to see that happen, we could see price consolidating underside of the institution for some time to come. So it's imperative that we see price moving away from the 930 mark as soon as possible. Get below that and get a nice bearish engulfing candle confirming that the US dollar is still looking negative against the Swiss franc. Then ultimately long term we should be targeting these areas down here at the 890 mark. Last pair of the day is US dollar Japanese yen. Let's have a look at the daily. Very much consolidating. Prices yet again found support on the 7800 mark. A lot of support for this pair since June of this year, moving sideways. However, you can see prices being boxed now between the upper range here, which is the institution moving average, and the 7800, which happens to be our major support level for this particular pair. Last of all, yesterday's candle bearish engulfing. You can see we've had a nice bounce to the upside. However, near term, you can see it's been capped now with yesterday's pullback on the market. And if you look at how things are progressing, we're having lower swings just recently, and all this taking place. Notice the CTC is still negative. We have seen a lot of whippiness on this particular pair, so it can be very, very difficult to find trades on this particular pair because of all this indecisiveness and a major support. But you'll know that the highs are getting lower, and the CTC is predominantly red as we go into this consolidative range with the support. So what's going to happen eventually is one of two things. Either we're going to get this breakout to the downside of 78 here, see price continue to the downside, or we're going to see the 78 being a major support or consolidated support, and then price will start to build on that. Either way, we do need to get away from 78 as soon as possible, whether it's to the downside or to the upside. That remains to be seen. As you can see, yesterday's candle, a lot of negativity in yesterday's range, taking away 2 clear days of upside movement. So near term, it might look like we could see 78 being back on as our first target. So looking for trades intraday, look to see if we can see price reverting to the downside. At the moment now, the institution moving average is still below price. Histogram is still looking positive, and the RSI is just above the 50% line. So if we are to see 78 being retested soon, we do need to see price giving us a bearish engulfing candle and trading below that. So you can see how very indecisive it is on this particular pair, as price has been moving backwards and forwards between the 7800 here. No clear direction whatsoever. The only good thing at the moment now is these lows, the current highs that we're seeing are getting lower and lower and lower, and each attempt it tries to bounce on the 78. So sentiment is not genuinely there at the moment. However, the longer we go along 78, the more likely we could see price moving to the upside, building on that support. So it's imperative we do see price being squeezed here. Eventually it's going to break. It does need to show us a clear, decisive negativity, bearish engulfing candle below 78. Otherwise, still consolidative, not going anywhere. That's it for today, guys. Not much in terms of news, fundamental news out there. We've got Draghi speaking this morning at 8:30 a.m. GMT. He's going to be the ECB president, Draghi, speaking. We have the ECOFIN meetings all day today. This morning for sterling, we have trade balance figures at 9:30 GMT. Also, at the same time, we have the manufacturing product month figures for Great Britain. So it could be interesting to see what else. Nothing else for the US markets. So quite a quiet day. Yesterday was a bank holiday for them, so they'll be getting back to work today, and no further news for them. So be aware of the news, guys. You could see Draghi might be mentioning a couple of things regarding the current state of affairs with the new loan agreements type thing that's been given the all clear. Plus, we could hear some more news about Spain and potentially Greece. Otherwise, please, if you're using the CTC strategy template, please back it up with sound money management rules and keep it simple, guys. Follow the rules, and you'll find that you'll be making less mistakes. Okay. Otherwise, have a fantastic trade day, and I'll see you first thing tomorrow morning. Until then, trade serenely.